Good morning, everybody. It's Friday, September 1st. We're into a new marketing year for corn and soybeans, guys. Matt Bennett, good morning. Mackenzie, good morning. We've got a higher trade in the grain markets here. We're going to start off with some weather, I guess.
Yep, so another 7 days of dry weather are expected throughout U.S. corn and soybean country. There is some conflict between the models this morning. The Euro offers slightly more rain for areas of the Mississippi River Valley over the next 10 days compared to the GFS. The extended GFS, however, is decidedly wetter for portions of the central and eastern corn belt. Heat will be a factor this weekend. Warmer temperatures arrive in the plains today and tomorrow. By Monday, temperatures in the 90s will be seen as far north as North Dakota and Minnesota. Temperatures may top 100 degrees even in some far northern areas.
The Euro map had a high of 102 in some areas of southern Minnesota for Monday. I'll get to crop potential in a minute when we do the drought monitor. Matt, what's your thoughts on the river situation? So the river levels, we are, as of this morning, like 2.5 feet below normal. But the projection right now on the Mississippi at Memphis is that you're going to be like 7 feet below normal, maybe 10 days from now. And that's really close to those record lows I believe we saw last year. We were 10 feet below normal, I believe. What do you see in cash markets, basis, spreads? What are your thoughts?
Yeah, I mean, the problem is we don't need any more bad news as far as exports go for corn. Obviously, beans, we've still had a few exports trickling out, but bottom line is this is a problem, and I mean, obviously you go from it's kind of a crazy deal. Last year we were looking at levels similar to this, and then you were flooded, and then you
Yeah.
come back to this. I mean, I don't know how common that is over the course of a 12-month period. I mean, I don't remember it happening much, but bottom line is it's not going to be good for our export program, and basis certainly is going to be a factor. So very interesting on basis early on. You've got some hot basis levels, some quick ship type stuff going on, but those guys don't have to compete with the river at all. So I think it would be even better if they did. And bottom line right now is they're not going to have to compete with anybody. It doesn't look like to me.
So do you think that this has already impacted some of the new crop basis bids across the country, or is that something that's yet to come?
I think it's impacted it to a point. I mean, if you look right now at St. Louis, for instance, your bid's not anything to get excited about whatsoever. I mean, it doesn't draw bushels from anywhere. Now, if you're right there in the vicinity, yeah, you can haul in there. And I mean, it's going to be hard for you to haul somewhere else. Let's put it that way. But, we're 2 hours away. And whenever we were in the grain business, most of the time the river was trying to pull your bushels over there. Right now, there's no effort whatsoever because, I mean, what are you going to do, especially if you can't float a full barge down the river?
These spreads on the board, especially as it relates to corn, are as wide as we've seen in new crop spreads in years. D's to March corn was like 16 cents yesterday. D's to May is like 24 cents. Is the river partially responsible for that also?
I'd say partially. Plus, you're thinking that your carryout's going to go from what 145 to 22, according to the
Yep.
USDA. Now,
Yep.
obviously, you could drop that yield back some, but I was showing people a Farm Progress show this week. I said basically, if you go down to even like a 170 and a half, and then I just drop exports 150 million bushels, I'm still sitting at 2 billion.
You're
And
being
so
nice with your 150 because a
I
lot of
know, I
people
know,
think
I
it's much
know, but I didn't
worse.
want people throwing stuff at me. So I was
Yeah.
like, here's the deal. You could take the yield down quite a bit, and all of a sudden you're still at 2 billion. I'm like, you can throw supply stories at me. I don't want to be a jerk here. It's just I've got demand stories to throw at you. I mean,
Right.
you can only get so excited about it. I am not going to dispute that there's a decent chance you'll take yield down. It's just a matter of, is that going to matter?
Let's get to crop prospects in a second. We had some drought data out yesterday.
Yeah, so USDA released weekly drought monitor data yesterday. Drought conditions intensified across the Corn Belt this week as extreme heat impacted much of the region. Conditions worsened in parts of Iowa, Minnesota, Wisconsin, and Illinois. Hot and dry conditions were noted across the majority of the plains, and as a result, drought conditions in northern North Dakota intensified. Conditions are expected to worsen throughout the plains and the Corn Belt in the coming week as extreme heat will persist for the majority of the region. So when we look at the percentage of U.S. areas experiencing drought, corn country, 45%, soybeans, 40%, winter wheat, 46%, spring wheat, 57%, and cattle country, 40%.
It's been like weeks of this now. I mean, and we're going to have another week of this, the way that it looks. I mean, what are you hearing about soybeans in particular, Matt? I mean, how far backward has the crop gone?
I mean, that's a really good question. So, I was just trying to dissect, for instance, the Pro Farmer Tour numbers. I mean, pod counts are fantastic throughout the Corn Belt. I think Minnesota is the only state that was lower than a year ago. So people were scratching their heads saying, why in the world, does their yield forecast come down from last year? Well, their condition of the field, whatever it is, I don't even know what they call it, but I think they rate it 1 to 5 on how dry it is. And obviously it was excessively dry in way too many places. So, you can have a ton of pods. Doesn't do you a whole lot of good if you don't have any moisture. We all know August is the soybeans month, and so bottom line is right now, I think that the bean crop has probably come backwards some. I'm using 50 as my over under. I think this next week could affect us even more. I mean, the problem is that once again, I mean, you look in my part of the world and beans, have pretty good growth to them. They've had plenty of moisture, pretty fortunate. I don't know what they're going to make, but they're going to be good beans. But you go north of us 30, 40, 50 miles and things are a little bit different. So, I think whenever it gets right down to it, I'm at a 50 over under, and I think you could maybe scale it back a little bit from there even yet if we don't get any more rain in the next week to 2 weeks.
I think a lot of people are maybe somewhat frustrated about the action in the bean market this week. Like, we had been above $14, saw some selling pressure come in the last few days. I know that is frustrating if the crop's going backwards and you're seeing the market back off also. But, grand scheme of things, the bean market's acted really well compared to corn or wheat. It's kind of doing its own thing on this weather. Let's get to export sales, talk about demand a little bit.
So, U.S. corn export sales declined significantly last week. Net corn sales of 71,700 metric tons for the current marketing year were down noticeably from the previous week and down 39% from the prior 4-week average. Net sales of 991,800 metric tons were reported for the next marketing year, with the largest buyers being Mexico, unknown destinations, and Japan. Net soybean sales reductions of 50,700 metric tons for the current marketing year, which was a marketing year low, were down noticeably from the previous week and from the prior 4-week average. Net sales of 1.1 million metric tons were reported for the next marketing year, with the largest buyers being unknown destinations, China and Mexico. Net wheat sales of 329,100 metric tons for the current marketing year were down 19% from the previous week and 25% from the prior 4-week average.
Couple things that stick out to me. China was the largest wheat buyer, which is not a huge amount, 110,000, which is interesting. China has yet to show up on the corn sheet for new crop sales recently. It's been months since they bought anything for new crop delivery. I've had people tell me that I shouldn't talk about the book of new crop corn sales and how it's off versus last year, that it's too early. My argument to that is that things have changed the last 3 years, because China came in post-COVID, mid-2020, started buying corn. And each of the last couple of years, you've had these big Chinese commitments on the books prior to the start of the marketing year. And this year, this go around, we have nothing on the book. So my argument would be that, at the last 3 years, China's been in here with aggressive new crop commitments, and they're not this year. And that seems to be a problem, I guess.
Yeah, I mean, I agree with you. And, you hear about this flooding issue in China and that their crop isn't going to be anything robust. You would think maybe they're going to step in here and buy some corn. But at the same time, I don't know. It just seems to me that they've taken on more of an attitude that they don't want to do business with us unless they absolutely have to, and so I don't know. I mean, I still expect them to come in. The thing is that it's been frustrating. The book's been terrible. Would they go on a freaking tear and buy 2 million, 3 million, 4 million tons over the course of a couple of weeks? Is that possible? Yeah, it's possible for sure. And I mean, we're going to have a different discussion at that point, but you're right. They haven't done anything forever. So it makes you very hesitant as to think they'll do so. Now, I think if corn gets cheap enough, I don't know. It wouldn't surprise me if they step in and buy some corn, but right now is probably not the time, especially as we head into harvest.
Yeah, it doesn't look, the export situation for corn does not look good right now, given the book of sales and also the river situation. But this could all change really quickly. I mean, you throw a wetter forecast in, you shift toward a wetter pattern, second half of September, October. all of a sudden China decides to buy the harvest low, or maybe China prints the harvest low because they decide to come in and buy. It could change very, very quickly. It just hasn't changed yet. Speaking of China.
So USDA reported a flash sale of U.S. soybeans on Thursday. U.S. exporters sold 132,000 metric tons of soybeans to China for delivery during marketing year 23-24. During the month of August, exporters sold 770,000 metric tons of soybeans to China through 5 flash sales.
This is just routine business. It's nothing to get excited about. This is the sort of stuff that you absolutely have to see year in and year out. But our new crop book of bean sales is off like 37% versus last year. So China has been buying beans like they usually do, just not to the extent that they have been the last couple of years.
Right. I mean, they had a huge crop, and so I think that, I don't know that they are going to buy as much as what they have the last couple of years. I mean, maybe they will. I mean, it's definitely been better than corn, but I guess my thing is, I've been talking about this all week, and I mean, again, I was at the Farm Progress Show. I told folks we're losing export share. I mean, it's been happening over the last several years. It's going to continue to happen, in my personal opinion. As long as we're using our beans domestically, I'm pretty excited about it, and I think that those potential are there, but we are going to lose export share, in my opinion. And I'm worried that, the price action isn't always going to be what people like to see, especially, let's say, Joe, that you take a U.S. carry out down to 150 or 200. That doesn't necessarily mean we're going to $16 beans, People would think it should, but heck, world supplies don't tell me it should.
This new crop U.S. soybean balance sheet is incredibly sensitive, or has the potential to be incredibly dynamic. You've got like 3 big pieces on there that matter for the most part. You've got, at this point, the yield number, you got the export number, and you've got the crush number. I think most people think at this point the yield number may come down a little bit. The export number could come down a little bit, but I think the crush number may be understated slightly, given what are fantastic crush margins, expanding crush capacity. A lot of people have made that argument. So it's like, it could get really interesting one way or the other. And it doesn't take much in either of those like 3 categories, Let's get to some economic type stuff here for a second.
Consumer spending surged in July. Household spending rose 0.8% in July, the fastest rate since January, and up from a revised 0.6% in June. Despite an uptick in spending, consumers' dollars are running thin. In July, the personal savings rate dropped to 3.5%, the lowest since last November. In the 3 months through July, inflation fell to an annualized rate of 2.1%. The latest figures on inflation point to the Fed holding rates steady this month.
You're getting closer to the Fed's target on this inflation stuff. This consumer spending, they had the adjusted for inflation number here, and it was up 0.6% in July. There were 2 different third quarter GDP estimates out. Atlanta Fed is talking 5.6% annual increase, which is huge because we were only 2.1 second quarter, and then S&P Global said 3.8. So, I mean, there's a lot of recession talk out there, but those numbers from Atlanta Fed, from S&P, from everybody else, I mean, are not indicating recession. And I guess no recession is probably good for the majority of our viewers here.
I'd say so. I mean, one thing that concerns me, of course, spending's up a little bit. People are saving less, though, and I don't know. People are probably sitting in a debt situation where these interest rates are going to impact them on further down the road. So I'm still of the opinion that if you do get into recession, interest rates are going to have a fair amount to do with it. But that's just my personal opinion.
General thoughts regarding the Fed right now, I think for most people, is that we're going to see a pause here for a little while. You're going to see a pause almost certainly in September. There's no October meeting. November is kind of like they're more leaning toward an extended pause for the time being. So higher for longer, but maybe not necessarily like pushing Fed fund to 6-7% at this point. Cattle futures were higher yesterday.
They sure were. Feeders were up anywhere from 65 cents to $1. Live cattle were 50 cents to 92 cents higher. Fat cattle trade so far this week has been soft and mostly steady to lower. In Kansas, it was steady to $1 lower at 178 to 179. Up in Nebraska, we traded cattle at 182, which was $2 to $3 lower. In the Western Corn Belt, we saw cattle trade between 184 and 185, which was $1 lower. Down in the Texas Panhandle, cattle traded at 179, which was steady to $1 higher. Choice box beef ended the day on Thursday at $313.79. That was down $1.32. Select ended the day at $289.25. That was down 28 cents.
Matthew, cattle market thoughts?
Yeah, I mean, I still feel the same way I felt for a while. I don't know that you push this thing right now. I just think that what we see coming is, as long as the economy can sustain it, you're going to take fat cattle higher yet. But I do feel like, it's an old story at this point. We know that things are tight, dynamic market as far as fundamentals go. I still expect to see 200 on the board printed at some point.
Why are you such a perma bull, dude?
Well, here's the thing. I'm telling you, people out west like McKinsey. I mean, McKinsey's out there just counting her money with the kind of money that she's making in the cattle money right now. And so some of these guys are selling heifers for what, 15, 17, 1800 bucks. I mean, they're going to quit doing that at some point whenever the pastures heal up. I mean, we know that that's the trend of things, that you're going to retain those gals. And when you do, cattle on feed numbers are going to be just crazy low. Okay. And so what'll happen in the fourth quarter, first quarter next year, I think, is that it's going to create some sort of a panic. And I believe you're just going to have like a blow off top type
So we haven't seen
situation.
the panic yet.
I don't think
Even
so.
after the months of this, no panic yet.
I don't believe that you've seen the numbers. The cattle on feed numbers will be some of the lowest we've ever seen.
There's
That's my
no
personal opinion.
capitulation yet, is what you're saying. We haven't quite gotten there.
Yep.
Outside markets this morning, guys. U.S. dollars about flat. Stocks marginally higher. Bonds are off. Crude oil's acting much better, up $1.01 in the October WTI at 84.65 last trade. Have a great weekend, everybody. Remember, markets close on Monday for Labor Day. We'll see you Tuesday.